stocks which we are watching out for today is Borosil. The company's raised about 150 crores via QIP. This is our special segment, Insight Edge. And the insight out here is that the stock, while it has seen a bit of a decline from the highs, it's seen a decent move also earlier. And this morning we had the management who joined us as well. The big question we asked them that, why is it that you raised funds just to pay that 150 crore debt that you have on your books? There was an interesting answer to that. They said that, they increased their debt beyond their comfort levels. So being conservative, they wanted to get rid of that debt immediately. And also they have some expansion plans ahead. So they may want to, go ahead and take some more debt going forward. So as a result of which, they were erring on the side of conservatism more than anything else. They will tell us what those expansion plans are at a later date, but these are expansion plans that they have for the end of this year. Apart from that, they've also said that in this first quarter, while business has been slow in the general trade side of things because of heat, modern trade and e-commerce have picked up. So they continue to stick to the 15 to 20% revenue CAGR for their consumer business going ahead, as they are playing tableware as well as kitchenware, the tiffins, etc. We hear from Borosil as well. So that's a big macro trend that they are playing. And importantly, they have also plans for some sort of inorganic expansion, which they're looking at in this space. So let's see how that pans out for Borosil itself. Very recently, they demerged the scientific wear business as well, which too is listed on the bourses as Borosil Scientific. Let's see how that pans out too. But for now, the consumer business is something that we're talking about. We spoke with Srivar Kheruka, who's the managing director of Borosil, and let's hear out what he had to say.
We've done a fair bit of expansion for a company our size. In the last 2 or 3 years, we've invested more than 600 crores in the business altogether, and we raised about 150. Now, the business itself has been growing, well. Last year, we closed the year about 950 crores of revenue. This is up roughly 4 times in the last 6 years. So we see a future capex as well coming up, for which again we will raise some debt. So those are the main reasons for the QIP. And we have now with this we'll be back to almost zero debt. So in terms of view, given that we have more expansion plans coming up and we have a internal metric that will not go beyond a certain level of debt, we wanted to come back down to zero, and then we don't mind again going back up when the expansion doesn't work out. I would say that we would stick to our 15 to 20% medium-term CAGR growth kind of numbers. Obviously, that's not specific to any quarter, but general yearly trends. I can't give you any specific timelines, but I do believe that probably sometime by the end of this year we will announce something. We will announce the new capex cycle.
The management of Borosil there speaking to CNBC-TV18. Some interesting names as well in the QIP. The DSP Small Cap Fund was issued almost 40% of the shares of the QIP. Morgan Stanley was issued shares. Societe Generale was issued shares. So big names there buying shares of Borosil in the QIP. But the stock off the highs of the day, currently trading with a negative bias.
150 crore QIP, 40% of that would not be too much. And given the sort of paper that is available for supply out here and the demand that there is for funds, etc., it was only a matter of a few minutes that this would have been subscribed, I guess.
Indeed. That's Borosil for you.